And so ultimately that means deficits are, the rules-based global order, I would say from an economic standpoint, has been sort of this,
You've spoken a lot about fiscal dominance, where essentially monetary policy becomes subordinate to government spending. But I get a lot of questions about this from viewers that maybe don't have an expertise in macro, and they're wondering, how does government spending end up with stocks at an all-time high? How does the money funnel into essentially these assets? Because I think the first impression that people would have is that, if the government is spending a lot, they're spending it on their employees or maybe infrastructure, government programs. How is it ending up in stocks?
Yeah, I think it's ultimately, dollars are fungible, right? Once you emit it into the economy, you can't control what happens to it. We saw that with the stimmies during COVID, right? It was like, okay, well, toilet paper or TVs or whatever people were buying with that stuff. And so ultimately that means deficits are inflationary over time. Now, I would argue that historically part of the strategy of the U.S. government has been to sterilize those deficits by giving tax breaks that steered the money into financial assets as opposed to real economy, right? So I've been in the workforce for 30 years. I've always gotten a tax break if I can put up to 15% of my salary into 401k, right? And so that's what I've done and a lot of other people have done. Same thing for a number of different professions. And that works because all else equal, I would have made 15% more each of those years. And the government would have taken their rake, but I would have spent more into the real economy. I would have bought real goods. Inflation reported would have been a bit higher than it was. And that would have hurt the bond market. And everything has been done to, help the bond market, defend the bond market, support the bond market over the last 40 years. And that strategy actually in the short run, like so much we do as a country, makes sense in the short run, even in the intermediate run. The problem with it is that in the long run, it leaves equity prices, if you keep running deficits, you keep inflating equity prices. And if you don't include asset price inflation in your calculations of inflation to adjust the economy accordingly, which of course they didn't, you end up with a situation where equities become the key marginal driver to consumer spending and the key marginal driver to U.S. government receipts. And so now the government becomes critically dependent on stocks going up just to keep the wheels on the cart for their debt. And, if you do some other things from a tax perspective, which they've done to accelerate that, if you do some really stupid things fiscally that have literally negative economic value added, like $8 trillion on war in the Middle East and certain other things, bailouts for fraud, those are negative value add. So negative economic productivity. So where I'm going with this is that I don't know that it's greatly appreciated. There's sort of a stock and a flow, right? There's a stock and a flow issue to what I've just described. The stock issue is that we're running $2 trillion deficits a year structurally. And that money where's it going? Well, I just said 70% of it's a cash payment to either boomers and silent generation or their care providers, who are then turning around and spending it into the economy. Because remember, what percent of the U.S. economy lives hand to mouth, right? Is it 60%? Is it 70%? So any money you give any of those people is going to be spent instantly, right? So there's a velocity of money. So that's the sort of the flow issue. The stock issue to this strategy, I don't think is appreciated still what's happened. And I think it ties back to your point of why, what I was talking about before, of just why I think S&P markets, why is the market at all-time highs? Is S&P, TLT, S&P over TLT, stock, Bitcoin over TLT, gold over TLT, is that now the boomers and the silent generation, to a lesser extent, have all this money. They've got 70 trillion, 80 trillion in assets. And there's a hard stop at death, right? You can't take it with you. So all of a sudden, all these asset markets, which for the boomers' entire lives were essentially a sterilization of inflation that would have been higher, driving rates higher, making the U.S. government's fiscal situation more intense. It would have been a free market. All of that sterilized inflation in paper assets is now coming into the real world. Go to a restaurant. Take a look around you. Who's there? Boomers. Go to a resort. Take a look around you. Who's there? Boomers. Go on a nice vacation. Who's boomers? Why? It's like when
they're the
you
ones
ask Willie
buying
Sutton,
homes.
they've got the money. Guess who's buying the homes, right? How can mortgage rates have gone from 2.5 to 7.5, and home prices haven't taken a they haven't missed a beat. Home prices are at all-time highs. Why? Talk to a real estate agent. Well, boomer giving their kid cash to pay a house. So I think that dynamic is sort of part and parcel or sort of, part 1A to what I described before, which is the markets are realizing that there's no getting out of this, right? They're going to have to print the money because that's where they've gotten themselves. And I think within all of that, there's this secondary effect of like there's a hard stop at death. Spend it while you got it. And who's, and the challenge in all this is like, well, we just need to hit stocks to slow inflation. Yeah, that would work if stocks weren't the key marginal driver to not just consumer spending, but to GDP and to tax receipts. And even then, that would be okay if the U.S. hadn't blown all this money on negative productivity stuff to run debt up to $37 trillion. We are not earning a positive return from the $8 trillion we spent in Iraq and Afghanistan. We are not earning a positive return from the bailouts of Wall Street. We're not really, earning a positive return. I hate to say this from the entitlements we're paying to. That's the stage of life they are. That's not discriminatory. That's just an economic fact. You are productivity, and then once you get to a certain age, you donate to the system, and then you take from the system. That's just how it works. So we're spending all this money. So if you wanted to tank stocks to slow inflation, all you're going to end up doing is blowing up the treasury market because stocks back the treasury market. And, then we go right back to sort of, rule number one. Nothing's allowed to hit the treasury market. And I think that's why stocks just go up every day. I think that's why we're seeing what we're seeing, which is and forget about I know based on conversation I'm having with very serious people, this is a conversation happening at the highest levels of finance. They can't do anything about it. They have to do this. And I think that's what we're seeing in asset prices.
Can you talk a little bit about that, maybe for people that are coming in and a little bit newer, trying to understand this monetary reset that's underway? What is that rule-based order, and how has it been coming apart?
So, the rules-based global order, I would say from an economic standpoint, has been sort of this, we send our factories and jobs abroad. Foreigners make stuff for us. They send us the stuff. We send them the dollars to pay them. And then, they reinvest the dollars into our financial markets. And that's been very good for China. It's been very good for Washington. It's been very good for Wall Street, right? As Washington gets cheap deficits, Wall Street gets to touch the money first, Cantillon effect. And, in the short run, it's great for America, too, because when you go from 30% debt to GDP in 1980 to, 125% today, I would say we're on the wrong side of the marginal utility curve and probably have been for 10 years. But at least until you got to the peak and started rolling over the marginal utility curve of more and more debt, we had a great debt-fueled consumer party, right? Hey, how awesome. And who doesn't like a party? I certainly do. So that is sort of the rules-based global order. And an addendum to that has been highlighted by many people, correctly so. It's an oversimplification, but I think it's a truth. Is if you as a foreigner try to do something to change the rules-based global order, the U.S. military shows up and kicks your head in. And I think that's sort of a 15-second version of geopolitics since roughly the year 2000. And that's fine. That's realpolitik. That's realism. That's history. That's humanity. Okay.
Well, let's pull on some of those threads because it seems to be a growing consensus that there is a monetary reset underway. But is the monetary reset that the BRICS is trying to achieve the same as the one the US is trying to achieve through things like Genius Act, stablecoins? Are there two simultaneously underway that are battling each other? Or actually, are we just moving toward a neutral reserve asset, gold, maybe in the future Bitcoin, and this will all actually work out in the US's favor in some ways?
I think there's a battle for the moment I agree with that sentiment. I think ultimately the Genius Act is an attempt to find repressible balance sheet, right? If they can get stable coins big enough, that lets them do a couple things. Number one, it conceivably, depending on how they manage it. I mean, look, if Bessing comes out and says, Eurodollar markets are no longer eligible for swap lines, but everything in these stable coins are, that could conceivably create a flow of capital out of Europe and around the world into these dollar stable coins, which will be backed by T-bills. Okay. We'll see how much money flows out. I could see some would, but as with so much that we do, it's a very short-term solution because ultimately it turns around and creates a crisis in Europe like tomorrow. And when Europe has a crisis like tomorrow, guess what they're going to sell? The dollar assets they've been buying under the old rules-based global order for the last 40 years, which now total $62 trillion, by the way. $27 trillion net, $27 trillion net, $62 trillion gross. So it would be an attempt to basically, okay, we're drowning. We need to keep our heads above water. Quick, grab Europe, shove them underwater and stand on them. And, we can take a few more breaths of air. It's not nice, but that's where we are in this movie because we've played our hand not very well for the last 30 years. The other thing it gives Besson the flexibility to do conceivably at some point is if he's able to suck a bunch of money in here into stable coins, and it doesn't immediately turn around and blow up his asset markets, which it probably would, but let's just, for sake of argument, it would conceivably allow him to then disintermediate the Fed altogether, which is to say, all this money came in overseas and wants the backing of a dollar, because we're not going to back the Eurodollar system anymore with swap lines. But the payment for that is that we're issuing in the T-bills that are in 2.5, 3 trillion in stable coins, which is his number, not mine, over the next 4 years. We're gonna make them non-marketable T-bills, and the yield on them isn't going to be 4. It's going to be 30 basis points.
What are you most concerned you might be wrong about?
To be honest, I'm most concerned that I'm wrong that the domestic political fiber will hold together as long as I think it will. And I wish I didn't have to say that. I don't say that lightly. Because I feel pretty tight on sort of everything else. Look, if maybe something a little less heavy, if I wake up tomorrow and, there's a, political coup in Russia and or China all at once, and we've replaced them with sort of, the Chinese and Russian version of Boris Yeltsin from 1991, and they proceed to sort of sell their country to the West at pennies on the dollar, then I'm going to be wrong, and I'll be the first to say it. But failing that happening, and I don't see any sign that that's happening, then it pushes us into this, this dynamic of governments under pressure. And this isn't an indictment of one party or the other. This is governments going back for thousands of years. You can read, and I would recommend everyone does read The Storm Before the Storm by Mike Duncan about late Republic Rome. And sort of because it's like all you got to do is scratch out the names and add the ones in. It's like reading the last 15 years in the U.S. War's not an option now. It's either nuclear war, which is whatever. It's sort of like when COVID was like, oh, COVID's going to kill us all. It's like, well, if COVID's going to kill us all, what's the friggin' buy stocks because we're all going to die. And if it doesn't, stocks have gotten killed, so buy stocks. Same kind of thing. If we can't go to conventional war without losing, then either we're going to lose. I don't think we're going to go to conventional war, or we're going to go to nuclear war, in which case everybody loses. There are no winners. It's uninvestable. Or we're basically going to sort of go through this really bumpy time where we're going to do our best to reinvest and reshore. And the inflation is going to be really high. And the AI and robotics disruption is going to be really weird. And so I just think we're in this really, we've been hearing about the fourth turning for 20, 25 years now. And we've all kind of known that like sort of around 2025, we were going to enter this period where, 2025, 2032 is going to be really hairy. Like, I think we're there. I think we're there. And I have no idea what it's going to look like. And if anyone tells you they know what it's going to look like run the other way. They don't have any idea. And I don't either. And so for me, it's I think one of the wisest things I've read in the last, certainly in the last week or two, was from a friend of mine who is, he said, look, what I can't tell is if we're shifting from a high trust society to a low trust society. He said, look, this country pulled itself back together in the 60s. We had political assassinations and the country pulled itself back together. But we came into the 60s in a very, very high trust society, right? Camelot and everything. He said, if you go to the 20s in Germany, in Weimar, there were political assassinations of moderates and they were in a low trust society. They had just lost a war. They had, their institutions had sort of been rug pulled around the country.